All right, we are live. Hey, welcome to the webinar. I'm your host, Jason Brown, and we're going to be breaking down how to supercharge your profits using the power of options, even when stocks are falling. So do me a favor, shut off any distractions. We got a lot of information to cover in the next hour, maybe hour, 15 minutes. And so shut off any distractions, shut off the phone, shut off YouTube, Facebook, pay attention. Feel free to participate and engage. Feel free to, if you got a question for me, feel free to type it into the chat box that'll be located at your right. Only I can see your chat, myself and my team. And if for some reason we don't answer your question throughout the training, we'll be sure to shoot you an email afterwards, and then feel free to take notes. So let's get into it. If you're not familiar with me, I'm Jason Brown. I'm a stock market coach and options trader. You may have seen me from YouTube. I have thousands of subscribers. I have videos that you can see have been viewed millions of times. My how to trade options for beginners, how to trade stocks for beginners. A lot of videos that pretty much help people how to get started in the stock market. And I'm also the host of the Money Markets and Mindset podcast. I write blogs over at thebrownreport.com. And then I also founded Power Trades University, which is where I do my coaching. I have my courses and then our stock trading community for our premium members. So just a little bit about me, just in case you're not familiar with me or my story. And on a personal note, I'm not just all about business and the stock market. I'm a new father, so that's my daughter over there to the right. And then we had our baby shower down there at our house before she was born. That's my mother and my brother down there, the two people standing in the picture. I love to scuba dive. I love to skydive. That's me and my best friend over there scuba diving. Me and my good friend also went skydiving together. I'm also a certified scuba diver up to 145 feet. So I love being around the water and I love being underneath the water. It's something calming about it. It's something just, it's like a whole new world. And that's kind of how the stocks and options market is. For some people, it's a whole new world. And I hope to open up that world for you today. So you're in the right place. If you want to learn how to leverage a small trading account, $5,000 or less, you're in the right place. If you have a trading account over $100,000 and you want to learn my protection strategies and my leverage strategies, then you're in the right place. Because most people know how to make the money, but they don't know how to keep it. You want to learn how to invest in pricier stocks, so the Amazon, the Googles, the Teslas, the $1,000 stocks, but you don't necessarily have that type of money to invest in those and see a nice return. You're in the right place. And if you want to learn the strategies to profit in any market condition, even from a falling stock, then you're in the right place. Now, you're in the wrong place if you're looking for a way to get rich quick without learning how stocks and options work together. You're definitely in the wrong place if you're lazy and you're just not willing to put in the work to actively manage your own money for greater profits. When I say put in the work, at least 2 hours a week. This is not set it and forget it. This is not, let me call my financial planner and he just handles that. I don't know how it works. So if you're lazy and you're not willing to learn how this works, then this probably won't be for you. If you're not willing to take a calculated risk, this is the stock market. So you can lose money. Disclaimer. So if you didn't know that, now you know that all trades don't go correct. Even with the best strategies, you can still potentially lose money. So if you're not willing to take calculated risk, or if you have a panic attack, when you put money at risk, this probably isn't for you. Also, if you get upset or offended when someone like myself gives 60 plus minutes of free content and makes an offer at the end, then this isn't for you, because I'm also going to share with you at the end how you can work closer with me, my team, and be part of my community where I actively coach and share my trades every single week. So let's get into it. Here's what you'll learn by hanging out with me today. You're going to learn 2 of 12 ninja option strategies every trader and investor should know. So we only have time to go through 2 of them, but there's a lot more that we dive into inside my program and inside my courses. But I'm going to share with you 2 today. We're also going to do a side-by-side risk comparison of buying the stock versus buying the option. I'm going to share with you which one is more riskier and which one is less riskier. And then also I'm going to share with you how to profit from stocks that are falling without ever owning the stocks. Most people know how to make money when the stock market is going up, but they don't know how to make money when it's going down. I'm going to share with you how that works today. So stay tuned until the end. By sticking with me to the end, I'm going to share with you a cool bonus, two cool bonus. Actually, I'm going to share with you how to get 2 of my best selling courses and a few value added bonuses for free. That's right. So make sure you stick around to the end so I can share with you how you can pick up my stock trading course and then my option trading course absolutely free here. So let's discuss how most stock traders make money. Stock traders typically buy low and sell high. And so the mindset of a stock trader, when you really think about it, is every stock is going to the moon. They think stocks only go up, or at least they hope stocks go up, because that's the only way that they make money. They buy at 10, they hope to sell it for $15, $20 later. But the reality is, do stocks always go up? Let me ask you that question. Do stocks always go up? You're either shaking your head right now, or you can feel free to, type a comment in the box. But the answer is no. My first profitable trade is I thought I could literally print money. When I started finally making money in the market, I'm like, this is too easy. I can just go to the computer and print money like a printing press. And so I was knocking that out of the park, right? As long as the stocks was going up, I'm like, this too easy. I can't lose. I'm talking to my friends and family like, why isn't everybody doing this, right? And then many of you probably can relate to this. The moment the market start going down, I was like, please, Lord, if I could just break even. You know what I'm talking about? It's like, how did I go from being up $20,000 to being down $5,000? And I just felt like deflated. I know I'm not the only one. I'm sure some of you have been there before. You're probably shaking your head like, yeah, I know what you're talking about, Jason Brown. I've been there before too. And so that led me on this path to think, how do I make it rain money even when stocks are falling? Because I realized at that point that stocks don't always go up. So can you relate to one of these? If you're looking for a way to consistently make money in the stock market, because that was me. I had made some money and I lost it, and made it, lost it. Or maybe you can relate to this. You have a small trading account. When I first got started, I only had $500. I didn't even have $5,000, but I eventually found a way to get more money, but I was looking for a way to grow it exponentially. And then when I finally made it to over $100,000 account, I'm like, how do I protect the money? What are the protection strategies so that I don't lose it all? And then maybe you can relate to this. You know what to do when the market is up, but you don't have a clue what to do when the markets are down. And if you can relate to any of those, then you're going to be excited about what I'm going to share with you, how options work. Now, let me just take you back to about 2003. Once I first started to realize the power of options, I was able to take a $10,000 student loan, because once I started making some money with the $500, I was like, well, how do I make more money? How do I get more money into the machine or the system? And so I actually ended up taking a $10,000 student loan. I don't recommend anybody do this, but instead of using it for school, I actually put it in the stock market and started trading options. And then I grew that account to over 6 figures. And then in 2018, just the first 6 months of the year, pretty much grew another account to just under $400,000 in just 6 months. And so over a decade later or so, I'm still doing the same thing, just figuring out how to flip money in the market, and I'm using options to do that. And so the moment my entire life changed is the moment I decided to start using options in my trading. So that's my secret weapon, and that's what I'm going to share with you today, because I was in the position where I'm like, I don't have a big account. How do I get bigger returns? And then once I had a decent sized account, I'm like, how do I protect it? And then after losing the money, I started realizing, how can I do this more consistently so that, this could be part of my life, and I'm not riding a roller coaster all the way up and then riding it all the way back down and basically breaking even or even losing money. And so I'm going to share with you my 3P system today, right? And that system is power charts. You got to learn how to read the stock charts. which is another whole session, but I'm assuming you understand the power of reading charts. And then power trades. We're going to show you how to use options to supercharge those trades, and then power profits. Once you get the profits, how do you keep them? We talk about that with advanced options, but we're going to be talking about the second P in the system today. So stocks can move three ways. We already shared with you two ways they can move. Stocks can move up, stocks can move down, and stocks can move sideways, meaning, something's at $10 and 6 months later it's still at $10. And so we now know that stocks can move three ways. And so that's the first problem of stock traders. Most stock traders can only make money one out of the three ways that a stock can move, right? And that's their problem. They hope it can go up. And so that simply means that stock traders, if you do the math on it, the stock can move three ways. They only know how to make money one way. Is that what? It's going up. Well, that means they have a 33% chance of success. One out of three ways to make money. And you don't have to be a genius if I ask you, or a mathematician to ask you, if you got a 33% on a test, would that be a pass or a fail? Feel free to type it in the box, or maybe you're nodding your head like, yeah, that would be a fail. Absolutely, that would be a fail. And so what this really means is, to put it a different way, is most traders have a 67% chance of failure. And so there's no wonder why most people are scared of the stock market, or I know somebody who lost all their money in the stock market, because most people only have one way to make money out of the three, which means they have a 66% chance of failure. I mean, the odds are stacked against them. And so we know that stocks can move up, but that's only one of the ways. Now, the second way is stocks can move sideways. And so I call that grandpa's buy and hold strategy. It's like, just buy something and hold on to it. It's a good company. But let's take a look at a good company, or at least a so-called good company. Let's take a look at Ford Automotive Company. Would you agree your grandpa probably worked for him? I know here in the Motor City, here in Detroit, Ford, GM, Chrysler, these are big companies that were great for our families back in the day. But look at it. Imagine you bought some Ford stock, April 1998. Price was $13.50. Fast forward, January 2019. Price is actually $8.50, right? So not only did it not stay the same, you actually lost about $5. And so the buy and hold strategy usually results in a loss due to inflation and a loss of time. Now, somebody's going to say, but at least you were collecting dividends. Yeah, the dividends don't pay that much money. And the reality is, if you were holding on to something for 21 years later, like, that money doesn't even buy the same amount that it used to buy, let alone if you lost $5 per share. And so now you're looking at the second problem of stock traders, that the buy and hold strategy, it just doesn't work. 21 years later, the stock still has not moved. Now, we can't dispute that. Is Ford a good company? Well, of course, these guys are invented the assembly line and all that stuff, but that doesn't mean that you can just put money away and not look at it for years and expect for it to work out for you. And that's what most people do. I just put money away. I don't even look at it. That is the wrong thing to do if you're looking to get financial independence or actually generate income or a living from the stock market. All right. And now the third way that stocks can move is down. And this is where most traders panic. In a down market, most people watch their earnings vanish over a night, over weeks, over months, especially when there's volatility, government shutdown, trade wars with China, all this stuff going on. This is where most people panic. They thought life was so easy when it was going up, but then on the way back down, they're like, oh my God, what do I do? And so that's the third problem of stock traders, or just regular old simple and buy and hold investors. They have no strategy to protect profits, and then they have no simple way to profit from stocks that are falling. And I want to change that for you today. When you leave this training, you're going to feel way more equipped than you were before you came into this training. All right. In fact, here's what one of our members who took one of our courses said: knowing how to trade options makes you capable in any condition. And that's exactly what I want for you. I want you to be comfortable knowing that no matter what the stock market throws at you, because it will throw some ups, some sideways, and some downs, I want you to be comfortable and confident that you can either make money or stop the bleeding on losing your entire account by having options to be capable to trade in any condition. And then the fourth problem of stock traders is that most people can't afford the best stocks without breaking the bank. All right. The good stocks are too expensive for the average stock trader to invest in. You look at Amazon, $1,000 stock, Google, $1,000 stock, Tesla, $300-$400 stock. Most people can't afford the good stocks. So what do most people do? They're left buying penny stocks, and these are typically the worst stocks to buy because basically you're buying companies that are about to go out of business. Let me let you in on a secret. The closer the stock price is to zero, okay, which means if it's a penny stock, it's trading for 50 cents, 75 cents. Technically, anything under $5 is considered a penny stock. It's close to going out of business. All right. So if you're going to buy something, you want to buy the best, not the companies that are struggling and getting ready to go out of business. If I were to put this in terms of buying a house here in the Detroit area, this is what your penny stock investment will buy. And most people are like, I just bought this house, right? That's how you are. Like, I just bought this penny stock. And you are the person that's like, I think they're going to come in and build a casino right here. Trust me, they're not building a casino right there, and they're not going to pay you a couple $1 million to tear down your house. That's typically the same thing about penny stocks. You're waiting for this company to get bought out. Well, if they were that valuable, they typically wouldn't be close to $0. And so these are the investments for option traders. Okay, you get the control. So I'm going to talk to you tonight today about control versus ownership. I want to talk to you about controlling the higher price house and not necessarily having to own it. And that will afford you the ability to buy houses or at least control houses in better neighborhoods and get a better return. So how do the sophisticated investors do it? All right. Options are the answers because options gives you a whole new tool belt. You get a hammer, you get a wrench, you get a shovel, you get a screwdriver. You don't go and build a house only with the hammer. You need all these other tools. And that's why options are the answer. It gives you the tools in up markets, sideways markets, and you definitely have the tools in down markets. So there are two types of options. Let's break them down. The first option is a call option. There are no other types. There's only two. There's call options and there's put options. But the beautiful thing about these two options is that from these two, almost an infinite amount of strategies can be constructed to put you in a position to win. So call options typically mean you think the market or a stock is going up, and then put options are options that you use when you think the market or a stock is going down. So understand the call option basis. Call options is a bullish strategy. So when you say someone say I'm bullish on the market, you say, okay, what strategy are you going to use? I'm going to buy stock or I'm going to buy call options. You believe the market or a stock is going up. So call options gives you the right to control a stock at a certain price for a certain amount of time. So if you're taking notes, this is something to write down. All right. Call options gives you the right to control a stock at a certain price for a certain amount of time. We're going to break that down. It also allows you to invest in higher price stocks at a fraction of the cost. And then it offers you leverage for a small bank account or a small trading account. So you get to leverage and possibly get some of the higher returns. Let's take a look at Google, for example, here. Google, at least at the time I took this screenshot, was trading at about $1,000, okay, per share. And so one thing I want to point out in Google while we're looking at this chart is Google can go, this is like November, Google can go from 1,000, all right, you can see the price here. Google can go from 1,000 up to about just shy of 1,100, right? So 100-point move. And it did that in about a month, right? This is a little bit in October and in November. But then look right here, like mid-November to December, went to $100 again. And then you can see here, mid-December to January, moved up $100 again. So you got 1, 2, 3 times that this stock has had a 100-point move. All right. This is going to be important for what I'm getting ready to show you next. So the question is, can a stock move like Google move $100 within 30 days? I just showed you it's done it 1, 2, 3 times. All right. It's going to be important for what I show you next. Now, let's walk through an example of if you would have bought the stock and if you would have bought the option. So hypothetically, let's say Google is trading at $1,080 a share. And let's just say you were to control it for 31 days. I just showed you that in 30 days, the stock can move $100. So we're going to take a look at the example of buying the option versus buying the stock. So that's the stock price. Make a note of it. And then come down here and look at, this is an option chain. If you've never seen this before, it's basically saying these are call options on the left. So you can see it says calls right here. Put options are on the right. And it's basically saying, hey, I want the right. So remember I said you can control a stock. I want to control Google at 1,065, which means I have the right to buy Google at $1,065 for a certain amount of time. What's the amount of time? For 31 days. So remember the definition of an option, the right to control a stock at a specific price for a specific amount of time. So the right to control Google at 1,065 specified time, 31 days. Remember, for that price, you're going to pay about $48.20 per contract, right? And the contract controls 100 shares. I'm going to walk you through all that on the next slide. So let's walk through this example of Google. Let's just say you were to buy 100 shares of Google stock. The cost of 100 shares, at least at the time of that screenshot, would have been $1,080.71. So that's $108,000. $108,000, actually $71, right? All right. Now, on the right side, let's just say you were to buy one call option that expired in 31 days. That was the February option for the $1,065 strike price call. And I showed you the price of that was $48.20. Now, because an option controls 100 shares, the way it works is if you buy one contract, it controls 100 shares. So you have to multiply the cost of the contract by 100 because you're controlling 100 shares. So that one contract at $48.20, controlling 100 shares, will cost you $4,000, $4,820. So that's how the math works out. Now, let's walk through an example of if the stock were to move up $100. So Google went from 1,080 to 1,180.71 cents. All right. Let's look on the left side. If you own 100 shares of Google and the stock moved $100, you would make $10,000. Congratulations. Not a bad amount of money to make. Now, on the right side, if you were to buy that one option contract, we already told you the cost was $4,820. So you have the right to purchase the stock at 1,065 because that was the strike price or the agreed upon price that you can buy it for. And so if the stock moved up $100 to $1,180.71, the difference between where the stock is at and what you could buy it at, which is, let me turn my drawing tool. I want to make sure you're getting this. Remember, you can buy it. You have the right to buy the stock at $1,065 because you bought the option. Okay. But the stock moved up $100 and now it's going for $1,180. So the difference between $1,180 and the $1,065 is $115.71. So let's talk about how that math works out. Your gross profit on one contract is $115.71 times $100. So that's $11,571. But you still have to subtract out the fact that, remember, we paid $4,800 for the contract, for the right to control Google at that price. So we have to subtract that back out. So your net profit, right, once you take the gross profit minus how much we paid for the contract, is $6,751. Now, somebody might be saying, hey, wait a minute. I made $10,000 on the left, and you're all excited that I made $6,751 on the right. That is correct. And let me tell you why. Let's talk about the rate of return. Okay. So on the left side, you made $10,000, but it cost you $108,000. So you put $108,000 roughly at risk just to make a 9.25% return. Let's look at the right side. Even though you made less money, or so it seems on the surface, you made $6,751 in profit, but it cost you $4,820. The return, 140%. Now, I want to make sure I'm not losing you here. I want you to think about the importance of what just happened. Number one, do most people have $108,000? Most people don't. But could you take $4,000, just under $5,000? Most people can get that through their tax return, or saving some money, or having a garage sale, or just diligently budgeting. But can you imagine coming up with $5,000 and getting 140% return? By the way, in 30 days. Okay. So the stock moved $100 in 30 days, no matter which way you bought the stock or if you bought the option. But which one gave you a better return? It's a no-brainer to see that the option would be a better alternative. And so you would have had a 15 times return, 15x, using the option versus buying the stock. And so that's the power of call options. It allows you to exponentially increase your profit potential. It allows you to control higher price stocks, higher quality stocks like the Googles, like the Teslas, like the Amazons. It also offers leverage for growing a small trading account. That's what excited me the most, because I realized as a little person, I can get in the game and play in the big leagues and play with some of the big boy stocks. Now, some of you might be saying, yeah, but what happened if the stocks fall? What if it fell by $100? So let's talk about that, because you'll hear some people say that options are risky. And I'm actually going to show you that they're actually less riskier than you might think. So if the stock drops $100, let's look on the left side and talk about if you would have bought Google, the stock. So you put up $108,000. If the stock dropped $100, okay? So the loss would be, if you had 100 shares, you would lose $10,000. Simple math. 100 shares, you lost $100 per share, $10,000. Let's look at the right side. If you put up $4,820 to buy the option contract and the stock fell $100, you would lose $4,820. You would lose 100% of your investment. Now, let's talk about some assumptions. That's assuming on the left-hand side that the stock was down and going to stay down, and you wanted to get out of the trade and you would sell it. Now, some people may say, well, I can just hold it until it comes back. Sometimes stocks don't always come back, right? Have stocks like Kmart went out of business, Sears. I can name a ton of different stocks that don't always come back. So you could be holding something all the way down to zero on the left-hand side as well. On the right-hand side, that's assuming the stock stays down below your stock strike price before the time expires. But you can always sell the option early if there's time left and actually recoup some of those losses. But I just want to keep it simple here. Bottom line is you lose $10,000 on the left. If you sell in 30 days, you lose $4,820 on the right. And so the thing about options is that you can never lose more than the cost of the option. So what's nice about that is you go into the trade knowing that I can never lose more than the initial $4,820 that I put up. And I think that's a good feeling. Whereas on the left-hand side, what happens if stock drops another $100, right? So now you're down $20,000, assuming that at some point you sell it and it doesn't rebound. And so that's what's the beauty of options. So when I think about which one is more riskier, I like options because it either forces you to only put up what you can lose, and it also forces you to take a loss or cut a loss if a stock isn't going in the direction that you think it is, which is why it's so important to learn how to read stock charts. All right. So let's talk about the other cousin of call options, or the brother and sister, right? So we know about call options. Let's talk about the second one, which is put options. This is a bearish strategy, which means you believe a stock or the stock market is headed down. Now, a put option gives you the right to put the stock to someone else at a specific price. And this is a very important distinction, because a call option allows you to buy it at a certain price, but a put option allows you to force someone else to buy it at a specific price. All right. It allows you to profit from a stock that is falling. I'm going to share with you how that works in a second. It also allows you to protect your portfolio and lock in gains. So if you have, $100,000 portfolio and you say, hey, I don't ever want to lose any money past $90,000, you can buy a put option that locks in and protects your portfolio at $90,000, which is really cool. So here's an example. Let's look at Bed Bath & Beyond. And you can see this stock is in free fall, right? So it's like, boom, boom, right? It's just going down. So let's take a look at an option chain here. So this is a 77-day option. And by the way, let me back this chart up. If you look at the time frame and you say, how far can this stock fall? Well, you look from June to July, 30 days, this stock fell from about 35, and then it fell down here to about 28. So that's about a $7 drop. You're like, but that doesn't happen that often. Well, then it fell from 28 right down here to about 22, 6-point drop, 7-point drop. So would you agree that this stock can drop $6 to $7 in 30 to 60 days if you know how to read the chart? So let's look at the option chain. I'm bringing that up because 77 days is more than enough time once you look at the chart and determine how long does it take for a stock to either move up or down based on certain patterns that we look for. And that's why we teach you to look for certain patterns in the power charting portion of the 3P system, because you got to learn how to read stock charts to determine when do I apply the strategy and what stocks are the correct ones to do it on. So Bed Bath & Beyond trading at 1956 you get 77 days on this option. Now the puts are on the right side here. And so you can get a $22.50 put. That means you can force somebody to buy the stock at $22.50. Now we don't have time to get into, well, do you have to own the stock first and all that? No, you don't have to own it. But there's some things that you need to know about how this works, how to get in, how to get out. But I just want you to grasp the concept. You can force someone to buy it from you at $22.50. You might also say, well, why would someone want to do that? Well, that person might think the stock is going up. So if they think it's going up, they are anticipating you never forcing them to buy it from them at $22.50. Because if it's trading at 25, you would never force them to buy it at $22.50. So they think it's going up. You think it's going down. So you're both on opposite ends of the spectrum of what you think is going to happen from the stock. But if you're smart and you learn how to read charts, which is what we teach people, you know that the pattern, let me go back. You know that the pattern says this stock is in a downtrend. All right. So that guy didn't learn how to read a chart. And so you're laughing all the way to the bank. Now, that $22.50 strike price put option, it's going to cost you it's going for $340 to $355. That's the bid and the ask. Okay. So let's look at it. The other way you could profit from a stock falling is to short the stock. So let's say you were to short 500 shares of Bed Bath & Beyond. All right. So to short the stock, 500 shares at the current price, $19.56, it would cost you at least $9,780. Not to mention, in order to short stocks, you typically have to have at least $50,000 to $100,000 in your account by law in order for you to even be approved for short selling. So most people couldn't even do that. But shorting has unlimited risk. But let's look at the right side. What if you were to buy 5 contracts? Because remember, a contract controls how many shares? 100 shares. So buying 5 contracts is the equivalent to buying or shorting 500 shares, but we're going to do it with options. Okay. So if you were to buy 5 contracts at a 22.50 put option contract, they're going for 345. So that cost for controlling 5 contracts, which was 100 shares at $3.45, $1,725. Now, let's say the stock falls $5. I just showed you the stock can fall $7, but we're going to be conservative. Let's say it falls $5 to $14.56. On the shorting side, your profit would be about $2,500, right? Because you could force somebody to buy it from you at at 1956. And if it fell $5, then you'd make $5 times 500 shares, which is 2,500. Let's look at the option side though. If you were to buy the options, 1,725, you have the right to put the stock to someone else at 22.50, even though the stock fell to 14.56. That's how put options work. You can force them to buy it at a higher price. So let's do the math on that. The gross profit on 5 contracts, right, would be $7.94. Now, if you're wondering, how do we get $7.94? We basically took the price that you can force them to buy it from you for, which is $22.50, and the current price of the stock if it fell $5, right? Assuming that the stock fell $5. So the difference between what you can force them to buy it from you for, and what is currently trading at, that difference is $7.94. So that's the gross profit. Okay. But you got to subtract out how much you paid for it. So the gross profit would be $3,970. That's 5 contracts times the gross profit, $7.94 times 100 shares. You get $3,970. But if we subtract out the cost of the option, which was $1,725, then you're left with a net profit of $2,245. Pretty close to the left-hand side. Now, let's look at the return on the investment. On the left-hand side, shorting the stock, you put up 9,780 and pull back 2,500, 26% return. Not bad. But on the right-hand side, the profit was $2,245 and it cost you $1,725 to enter the trade. 130% return. Big difference using the option versus trying to short the stock. And most people, again, don't have enough money to short the stock. And so, like, when you look at shorting the stock, it has unlimited risk if you look at shorting it by trying to sell stock that you don't have versus using the put option. Because if you try to short it using stock, what happens if tomorrow the stock wakes up and their takeover cannon and there's up $100? Well, that's unlimited risk if you were shorting it. But when you are using the put options, it's limited risk. So that's why I love using call options as well as put options on the downside. So, buying a stock is a small piece of the strategy. And the missing piece for most people is learning how to strategize with options. Now, I hope you learned something today, because if you didn't, you either were just deaf or blind and not paying attention, because I just shared with you some really cool strategies, how to exponentially increase your return with call options, as well as how to protect yourself in down markets, or how you can make money from stocks falling by using put options. And again, getting an exponential return. But just imagine if we had more time, right? I don't have time to teach you all 12 or 9 to 12 of the strategies, but imagine if we had more time. There's some really cool stuff that you can construct once you know how these work in and out and mix and match and call and put options. And so I'm not sure why you showed up today. Maybe you're uneasy with all the volatility in the market, with stocks moving up and down, and you're frustrated with your trading track record. It could be that you're like me and you're looking for strategies to become more consistent with your stock market returns. I got tired of making money and then giving it back. So I wasn't consistent. I was up one month, down the next month. Or maybe you heard all the buzz and excitement around how put and call options trading works, and you wanted to see how you can make it work for you. or perhaps you're just tired of making money in the stock market, like I said, and giving it all back. Like that is not fun. Just breaking even all the time, or even worse, losing money. And so it's time to graduate. It's time to go pro. And I want to help you with that. It's time to become a confident trader. It's time for you to have the strategies for both up, down, and sideways markets. We already know that the market can move three ways. Why not have a strategy for all three of them? Okay. And why not learn how to minimize your risk while increasing your profit potential? And so the obvious question is, how can you apply this system of leveraging the power of call and put options and use it to profit from it? And you have a choice. You can do it the slow way through trial and error by taking some of what I've given you here today and say, got it. I know how it works. Trust me, there's more to this. Which options to buy, which options to sell, how to look out for the market makers overcharging you for options. There's a lot more to this, how to determine how much time to buy on your options. There's a lot more to do, and that's why we say you can go the slow way and go through trial and error. You can also try to leave a seminar like this and go read books. And here's the thing. If you could learn this by reading a book, that would mean you could be self-taught. You would just have bought a book and learned it already. But the reality is books are boring. They're confusing. They're hard to understand. In fact, when I went and started to try to read books on this, once I read something, I realized like I need another book to understand what I just read. I was even more confused after reading the first book. And so the best way to get from point A to B is to follow someone who has traveled the road already. And I'm one of those people that have traveled the road. I've figured it out. I've learned the strategies. And that's what I want to share with you today. And so I want to introduce you to Power Trades University and give you two ways that you can start to learn how to master options. So the first way is the self-study option. So I'm going to talk to you about that. And then I'm also going to talk to you about membership and the benefits of not going at it alone. All right. And again, stay until the end because we're going to share with you how to get my best-selling stock trading course, as well as my option trading course, and a few other added bonuses completely free. And so I want to introduce you to Options Explained. This is my online options trading course, 30 lessons where I teach you how to leverage a small trading account, how to protect your account from major losses, how to profit from falling stocks, how to create rental income from your stocks. So if you already own stocks and you're like, I want to rent them out like real estate, there's actually a strategy for that. I call it my rental income strategy. In this course, I break down options, definitions, and terminology so that you're never confused about what certain words mean. Again, I'm going to share with you what other industries use options. I'm going to do more comparisons of stocks versus buying the options and what happens if the price goes up, down, or sideways. I'm going to break down the complete option structure, the option price formula. I'm also going to walk you through the best free option tools and resources to get you up and running quickly. I'm going to walk you through the three types of call options. Because each one has two types, but then there's three subtypes, right? So you got calls and puts, but under each one, there's three types of calls, and then there's three types of put options. So I'll talk to you about that. The best call option to buy and the best call options to sell. I'm going to give you my call options cheat sheet, checklist, worksheet, you name it. Same thing with the put option. There's three types of put options. So there's two types of options, but then under each one, there's three types. The best put options to use as protection against your stocks, my put option cheat sheet rules. I'm giving you all of that in this course, teaching you the control versus ownership strategy. Remember, I was sharing with you that there's a way that if you own stock in like an IRA or some type of retirement account that's not a 401k, but that where you can control it, you can do a rental income strategy where you can rent your stock out and you can get income every single month. That's if it was a real estate piece of property, which is a really sweet strategy. I'm going to share with you my get paid for waiting strategy. So if a stock is going sideways like Ford, I'm going to show you how you can milk it and get paid for that, for waiting for that stock to take off. I'm going to walk you through my put option strategies, how to profit, maximize your profit from falling stocks, how to protect your portfolio from when it gets hit. The saddest thing that happens to most people during the market downturns is they start to think my retirement is vanishing in front of my eyes. And most people, the advice that they get is, well, just wait and ride it out, versus knowing and having some protection strategies in your back pocket that you can use so that you can sleep comfortably at night, knowing that your retirement is protected. And then I'm going to share with you the important rules for selling and buying put options. This is literally the blueprint to learning how to strategize with options that I break down in this course. I'm sharing with you the blueprint. Here's what someone in our course said. I've never really had the confidence until now. Jason has given me the confidence. And you can see he says, hey, option traders, I'd like to thank Jason for sharing his knowledge and wisdom on the whole options buying process. Okay. And so what is this course going to cost you, right? The Options Explained course, my complete options training on call and put options, is $597. And so that's what you're going to get: the 30 lesson modules, how calls work, how put options work. We're breaking it all down in this course. And I'm going to share with you how to get it for free if you want to go a different route, right? I'm also going to throw in these additional bonuses. I'm going to also give you my advanced put option strategy. So it's the secret to buying stocks at a discount every time, 100% of the time, or get paid for trying. So if you don't get the stock at a discount, you'll get paid for even trying to get it at a discount. It's a really sweet strategy. I'm also going to give you my options trading cheat sheet. This is my personal options trading cheat sheet that I use to quickly reference and determine which strategy to apply. I'm also going to give you a bonus Greeks mini course. So if you've heard about delta, theta, gamma, beta, rho, I'm going to share with you how time affects your options and how you could calculate your profit potential using the Greeks. So you can go into a trade saying, this is how much I believe I'm going to make. And if it doesn't happen by this date, here's where I need to cut my losses, because this is how time is going to affect your options. We're going to give you all of that in my Greeks mini course. And then right here, what you're looking at is, this is the back end of where you would take the course. You can see all the modules are laid out there. The Greeks mini course is laid out there. And then for joining the day, you're going to get all the bonus material that we talk about as well. So knowledge is priceless. Okay. So just think about how much money you've lost not having these strategies, how much money you've lost when a stock went against you. I'm sure it was a whole lot more than $597. All right. Now, let me share with you the second way that you can get started. And that's by becoming a member of Power Trades Universe. So you got the self-study option where you can just buy the single course and go through it, study on your own and be on your way. Or you can join Power Trades University, which is where we keep our courses, our coaching, and our community. So let me break down what Power Trades University is. Inside of Power Trades University, this is where I go live every week. I do a 2-hour live options and stock trading webinar for our members. So every Monday from 8 p.m. to 10 p.m. Eastern Standard Time, I look for real trades in the real market, and I share with my students exactly what we're looking to buy, so you can see exactly what I'm thinking about buying and selling. You get access to my personal trade tracker and strategies. And then there's also live Q&A. So you get to type your question in, or if you have a mic, we unmute you, bring you on, allow you to ask your questions as well. You may be thinking, well, what if I'm not free on those days? Well, all the sessions are recorded, so you get to also watch the recording later. This is also where my 16 lesson stock trading course is housed. So I break down stock market language, how to read charts, how to understand candlesticks, how to recognize buy and sell signals. So inside of there, you get foundations. You also get options explained. Of course, we just talked about our 30 module options course. It's going to break down how to control higher price stocks for a fraction of the cost, the rental income strategy, everything that I just named, how to exponentially grow a small account. You get both of those courses inside Power Trades University. So you get the coaching. You also get both courses. You also get the Traders Community Forum. So this is where you get to network with other traders and investors. You get to post stock charts and get feedback, not just from me, but from the community. You get to see what other stocks the members are trading. And then you get 24/7 access to the members area. And so how much if you were paying regular price for this, because I told you, stick with me to the end, I got a special bonus offer for you. This is a webinar offer only. Foundations is $297. Options explained $597. To join my coaching program, it's $1,588. So if you were to buy everything separately, $2,482. And by the way, that would still be a great deal to watch someone for 2 hours live, find trades, chart the stocks, find the option strategies, and map out a game plan every single week and have a community to network with other people, ask questions. That would still be a great deal. And we have people who have and do purchase everything separately. But just for the webinar attendees only, you're not going to pay that today. To join Power Trade University is only, and this is a limited time special. When I say limited, I mean when the timer hits 0, the price goes back up to regular price. $99 a month is the webinar special only. So you can join Power Trade University, get access to Foundations, which is my stock trading program, get access to Options Explained, get access to the 2-hour live weekly coaching, the community. Let me share with you what some of our members have said. Jason, your teaching and coaching are very effective. She said, for the live video, I wasn't able to attend it live, but viewed it later. I've taken both of your courses, and yes, I'm going through them. I've virtually traded a couple times, made several live trades that have profited. I'm still learning things that come up with my live trading that can throw me off just when I think I'm understanding. She talks about getting a little bit panicky, but at the bottom here, you can see, I wanted you to know that your teachings and coaching are very effective, and I understood things much better having gone through your courses. Thank you very much. All right. Philip said, Monday night coaching has paid for itself 30 times over. All right. Because that was a Netflix trade that we did. He said, Jason Brown is the man. Monday night's coaching has paid for itself 30 times over with Netflix. I'm like, yeah, that Netflix call was a beast, right? He like, it was, it was 125% gain for me in just shy of a month. What's next? Bring it on. So it was cool. And I just wrote here back. I'm curious, how are you feeling about your research and ability to make an educated decision? What's going on with your trading right now? So I'm just following up with those guys. But I love the fact that people are getting real results. Those who decided to invest in their education, invest with us. Here's a back end of what it looks like. So again, inside of Power Trades University, typically Foundations is $297. You're going to get that included. Options Explained is $597. That's going to be included. So these are the two courses that you get. You may be thinking, how do I get the advanced options course? That's a different membership upgrade. We'll give you a special offer for that as too. But for right now, you get Foundations, Options Explained. You'll get access to our free charting software. You get access to the Bullish forum, the Bearish forum, in the general discussion forum, so that you can post trades, network with other traders, and then you get access to the weekly live coaching sessions, which are unbelievable and led by yours truly. So let me just put these side by side in case, this is a lot of information. If you're trying to make a decision, I want to put this side by side and really help you visualize what's on the table, what's possible, and then help you make a decision. So if you go with the course only, the self-study, you get the Options Explained course for $597. We're throwing the Greeks mini course. You also get my personal options trading cheat sheet and checklist. On the right-hand side, if you go with membership, you get all of that, plus you get Foundations, our 16-lesson stock trading course. You also get the live weekly group coaching 2-hour webinars. And again, if you can't make it live, they're recorded. You also get access to my coaching replay vault. So there's about 3 years worth of coachings of live sessions, weekly sessions in there that are just invaluable to help you get up to speed. You also get access to the Traders Forum, the network with our elite traders who've been through this. And for those who take action today, I'm also going to throw in the audio version of the course. So you're also going to get the audio download. I know for me, I like to listen to this stuff in the car. Sometimes just hearing it over and over makes it click, or while I'm at the gym or on the treadmill or something like that. So you're not going to pay the extra for that. We're going to just throw in the audio download. So there should be a button on the screen. Just click that. That'll take you to the checkout page so you can see if you want to do self-study, if you want to do membership, and then if you do the annual pricing, we'll talk about how we can bump you up to the next level membership. So just to recap, group coaching, that's my 2-hour live weekly trading webinar. We'll go over stocks and options from 8 p.m. to 10 p.m. Eastern. It's all recorded if you can't make it live. You can ask questions live. You can come on and type them in the chat box. You get access to my personal trade tracker, the trader forum, everything. And so at this point, there's really just 3 types of people. There's I'm in, where do I get started? Again, just click the button on the screen, or that's below in the comment section, or that's up in the right-hand corner. You should see a button on the screen somewhere that says join now. Just click that and it'll take you to the checkout page, and it'll just recap all of these details, and you can pick which option you want. Second person says, I'm in, but I got questions. I'm going to answer the most common questions. And if for some reason I didn't answer your question, just type it in the box. It should come to my email, or type it in the comment section below. And then I'll be sure to come in and respond to the comments, or someone from my team. And the third person is just says, having a strategy in any kind of market, it's just not for me. I'll just keep doing what I'm doing. And so to that person, we just say, hey, thanks. Feel free to sign off or stop watching the video. And I just want to talk to the people who are ready to get started, or the people who have questions. But for the third type of person, perhaps you know somebody who this is for. And so make sure you pass our information on to them. But you wouldn't be here if you already had a strategy for any kind of market. So let me answer some of the most common questions. All right. Is there a contract or a commitment to membership? So there's no contract. There's no commitment. You can cancel at any time. We don't believe in locking people in to anything. And so cancel whenever you want, but you just get access for the duration. So if if it's the middle of the month, there's no refunds or prorations. You just get access for the rest of the month. And then next month, your membership would be canceled. Or if you're on the annual plan, you get access for the rest of the year. And then next year, your membership will be canceled. So there's no contract, no commitment. What if you can't make the live session? I believe I answered that already. All the sessions are recorded. So if you can't make the live session, you get to watch the recordings. The recordings are usually up about 2 to 3 hours after the session, but we always say give us 24 hours, but typically we get it up in about 2 to 3 hours after the live session. How much time will it take to learn this? I usually say about 2 hours a week. If you're not willing to put in 2 hours a week, whether that's showing up live or watching the recordings, then this probably isn't for you, because there's no way that you're going to, this isn't get rich quick. This is get rich, but it's not get rich quick. You're going to have to put in some time. You're going to have to cut off Game of Thrones or This Is Us or whatever TV show you're watching at the time. You have to cut Netflix off, and you're going to have to, put in the work. And so if you're not willing to put in the work, we talked about that in the beginning, this probably isn't for you. Do I need a lot of money to get started? No, but you do need money to actually invest. But here's the cool thing about this. You can paper trade the strategies to make sure you're understanding it, making sure you're getting it. So you don't need money to practice the strategies. And once you make sure you got them down pat, then only then, should you look in the mirror and say, okay, I'm ready to put real money down. And so here's the thing at the end of the day, again, if you don't take action, you're going to go on through life having a lack of confidence in your trading, no game plan if stocks are going up. If they're going sideways or down, you make money, then you lose it and give it all back. Slow account growth. You're worried about losing all your money because you have no protection strategies. And then for those who do take action, this is what the future can look like for you. Confident in your trading strategies. You have a game plan for any market condition. You know how to protect your wealth. You can get exponential returns versus the mediocre returns. And then you have a strategy for growing a small account and protecting the account if it's over 6 figures. And so that's what's at stake here. And the market can get crazy sometimes. So why not have the strategies to protect yourself? So that's it. ladies and gentlemen, become an action taker. Get on the right side of this thing. I can't tell you enough about how great of a deal we got with the $99 promo that's going on. Take advantage of that before the timer hits 0, because after that, it's going back up to regular price. And so you get foundations, you get options explained, you get the forum, you get the coaching, you get the replays, you get the whole thing that we discussed here. And then you also, if you think about it from a mathematical standpoint, you get to stay in here for 6 to 12 months before you could even break even. Does that make sense? Like if you bought everything separately, you can stay in coaching, in membership for a year and still save more money than if you bought everything separately. And I believe without a shadow of a doubt, with me coaching every week, looking for the trades, applying what's taught in the course with the support of the other members, that you can be successful doing this if you're willing to commit for the next 6 to 12 months. So I'll see you in the membership area. If there's a question I didn't answer, I will respond to it in the comments or by email, but don't miss this opportunity to get ahead of the market and to get the strategies you need to succeed. Thanks for joining today.